friends. Welcome back to the Wall Street Skinny. I'm Jen.
I'm Kristen.
And today we're doing a skinny mini on what is going on in the crypto markets. For those of you who are new here, we are two lifelong friends with a combined 25 years of experience working and teaching on Wall Street, here to give you the skinny on the world's highest paying careers and ask all of the questions about finance that you have always wanted to know, but might have been too afraid to ask. And digital currencies,
or didn't
cryptocurrencies.
Even know to ask. I will add.
Yeah, exactly.
Most people, it's like you don't even know. It's like you don't even know the questions to ask because you're just like, wow, there's a lot of stuff going on. That's how I felt about crypto. It's like I literally don't even know what to ask because I just like don't even know what it is.
Right. And of all the things that we've talked about, I think crypto is one of those things that's at once everywhere and nowhere when it comes to finding out information about it. You see tons of headlines. Everybody's talking about it on social media, on Twitter, which I'm not even on. There's so much information about it, but understanding the nuts and bolts and understanding the fundamentals of what's actually going on can be really, really difficult, finding reliable sources, finding things explained in an intelligible way. And also, like you said, knowing the smart questions to ask about what's going on. So today is actually going to be part one of a two-part episode where we're bringing on the same guest. And we recorded the second episode first. And that was intended to be an introduction to what are careers like in the digital currency space? What is the evolution of it? If you're a young person looking to come up into the space, how do you get up the curve and what are the opportunity sets like? But because Bitcoin right now is at an all-time high, we thought it would be great to bring that same guest back on and actually do a really quick catch-up on what the heck is going on, why is Bitcoin at an all-time high, what's going on with all these other coins that you hear about, and explain how that works. It also seemed like a good time to talk about it because Kristen and I were just at South by Southwest and we were asked to speak on basically some of the nuances of building wealth in digital economies. The panel topic was staying human in a digital age, and it was hosted by Grit Daily and Lively. And we had this fabulous opportunity, all thanks to Elena Nunez-Cooper at Ascend PR, who managed to make this all happen a month before the conference even took off. We weren't even sure if we were going. So it was a really special opportunity, and we're so grateful.
The initial topic of the panel was supposed to be building wealth in this digital world in the metaverse. And we're speaking to actually a guest we're going to have on next week. And he's like, is the metaverse even a thing? What's funny is I actually, on the flight there and back, the woman who sat across from me on both legs was the same person. She was like a former doctor, started her own business, sold the business, then was brought in to work for Walgreens as the chief clinical trial officer and is like doing all this amazing work in relation to women's health. But it was interesting because she was talking about how like there was a lot of panels on the metaverse and like talking about using it to, in the case that she was in, like train physicians. Because it's so interesting these days because, you know, we had that conversation with Bella about how when you're learning to be a surgeon, you're working on actual human patients, right? And you're making your mistakes and then they're showing you like what you did wrong on actual human beings. And so one of the things that's interesting is the application of them like using the metaverse. Then you can train on not real people who are going to live and die. And she was saying, she was like, yeah, I was giving a speech and Meghan Markle was in the audience. And she was just like, oh my God, like, you can't believe you just told me that. And I have to now talk. And like, Meghan Markle is actually there, which by the way, sorry. Speaking of Meghan Markle, like what the hell is going on with Kate Middleton?
I know.
I mean, Kate Middleton's been missing. And then she puts a picture out that's photoshopped and then they're trying to blame her. Like there's no way in hell, like you can't do anything without it going through the sort of palace. You know what I mean? Like she can't just be like, I photoshopped a picture and put it out. Someone else did that. Anyway, this whole thing is bonkers.
I mean, I don't really even fully understand the royals and the whole obsession with them and like why the British taxpayers allow this to happen just so they can have something to be entertained by. But what's absolutely wild is I love all of the Saltburn theories that like this is Camilla's Saltburn, that she's like slowly picking them off one by one by one. But I saw something this morning on Threads that was like, just in case you think that these conspiracy theories are totally out of whack, don't forget that they killed a king in the 20th century with a combination of morphine and cocaine so that it would make the more prestigious daily news if it was the evening edition or the morning edition. I forget which it was, like, so that they tried to actually time this. But anyways, yes. No, I think that this is all totally wild.
I don't think that that's a thing.
No. It's definitely a thing, but I got to find it.
Yeah.
I saw it on Threads. It must be true. Okay. So today what we're going to talk about, aside from royals and conspiracy theories, after that panel, it's really become clear to us that crypto, this is something that people are so curious about, but don't really have access to great information about.
He was saying that one of the best places to get information about crypto is on X or Twitter, whatever the heck they call it these days. But you have to have a little bit of understanding, because you need to be able to distinguish the noise and the people that like don't know jack shit from the legit people. Because there are legit people, and he's like, it's a great place to get information, but you need to be able to filter out the shit. And I feel like there's probably some parallels with, like, if you go on Instagram and you're watching people talk about finance, like there's the snake oil salesmen who are like, buy this stock, get rich in 5 minutes, like make $1 billion. And then there's the people who actually have legit information. And so on Twitter, he said, like, that's where you can get really, really great info about what's going on in the crypto space. But you got to know.
Yeah, once you have the baseline knowledge to be well equipped. That's exactly right. I think one of the things that's interesting is you and I are talking so much about institutional finance, and we have a lot of retail traders who follow our account and engage with us. And these guys are so smart and so passionate about the markets, but bemoaning the fact that they can't really have access to these markets in the same way that the hedge funds and the prop shops can. And I think that that's actually a really interesting thing, because most people are always like, why aren't these industries better regulated? But you have passionate traders out there who want to express these views, who want to be participating in these kind of trades and want to be active in these spaces, but can't because they aren't institutional investor size and don't have access to the derivatives markets in the same way, don't have access to leverage in the same way. So I do think that that's an interesting thing that's perhaps even a product of the availability of these digital currencies as a retail product over the past 10 years that people got so comfortable trading in. They're like, oh, well, if I can do this, I can certainly trade treasuries. And it's like, no, you're not going to put on a 2s, 5s, 10s fly and 100K and a what. Even the heads of treasury desks are not doing these things PA, right, in their personal accounts. They're like, I leave that at the office and I come home and I go buy an ETF, right? Like, all right. So again, we're going to bring Chris Newhouse on. He is our go-to digital currency expert. You'll learn a little bit more about him, his story, and his bio in the second episode that we'll release next week. So let's bring Chris on. We've got our favorite guest, Chris Newhouse, on. And we had originally recorded this episode with Chris to be a 101 on careers in digital currency space, in forging your career path there, in the trading market and how it has evolved, and in the institutions that have grown up around cryptocurrencies. But because of what's gone on recently in the digital currency markets, we thought it would actually be great to splice in a little bit of an update before we actually go live with our original episode, to loop you in on what's been happening in the digital currency markets. We are just off a run up to all-time highs in some of the biggest names like Bitcoin. And Kristen and I just actually spoke at South by Southwest, where we tried our best not to sound like idiots, talking about staying human in a digital age and about building wealth in digital economies. But Chris is our go-to expert on this stuff. And Chris, we'd love for you to just quickly introduce yourself, even though we're going to get into your full bio when we really get into the meat and potatoes of this thing, and give us a little bit of the background on how you'd explain cryptocurrencies, digital currency to a 5-year-old.
Yeah, so quick background, Georgia Tech graduate, 2022, got into the space and have only been on the institutional side of crypto this entire time. So I was previously at Genesis Trading as an intern, moved to an OTC sales and trading role on both the derivative and spot markets at GSR. And now my current role is as a DeFi analyst at Cumberland Labs. So all of the special altcoins and Bitcoin and Ethereum, that's what I'm actually looking at and researching currently. So yeah, happy to
Chris,
talk a little bit more about all of them.
You've been cited in like every Bloomberg article I have read recently on the run-up in Bitcoin.
I'll be on TV on Friday, apparently.
Oh,
so this is I'm super excited for that. And yeah, it's a super unique opportunity, but it's only because crypto is so hot right now. There's a lot of stuff going on in the space.
Can we actually just kind of give a 2-second background? From what I know, and again, I am not the crypto expert, my understanding is that crypto came out of what happened post 2008. So Can you just kind of go back in time and just tell us, where did this come from?
Yeah. So whenever Bitcoin came out, I was actually in middle school. So
oh my God.
I can't really give the best explanation there because I got in 2017.
You were like, I was getting my braces off, and then.
Yeah, so I wasn't very familiar with the what happened in Bitcoin. I know a little bit about the history, and like you said, it came out.
I guess fair. So more like, what is the purpose of Bitcoin? Why not just use money, right? Why not use the US dollar? What's the origin story? Not the specific history, but what's the theory belief behind crypto?
Yep. So from my perspective and from the perspective of a lot of the true believers in crypto, it really is all about a decentralized financial system. So you're talking about, it came out post 2008 crisis, and it really started to rise in prevalency whenever we started to see governments interfere with the monetary and fiscal policy for a lot of their currencies. So you can't print more Bitcoin like you can print more dollars. So that's kind of the core, I'd say, ethos around cryptocurrency is it's fully decentralized, fully transparent, fully trustless. There's no central intermediary or government that is going to be having an impact on anything overall in the currency. Yeah.
Yeah. Okay. But I just wanted to make sure that are, I not that we have 5-year-olds listening, but we do have a lot of people that I could see my mother or my mother-in-law.
Yeah, I was going to say, it's not the young people who don't understand crypto. It's us dinosaurs who are legacy instruments who predate Satoshi Nakamoto, right?
Yeah.
I mean, Kristen and I were children of the 2008 global financial crisis. And when we saw policies of QE forever, right? QE 1, 2, 3, 4, et cetera, QE being quantitative easing, where central banks were injecting liquidity into the system. It obviously made sense for a lot of people who believe that that was not a stable way to run governments and run currencies in perpetuity, to offer some kind of alternative. And that was the genesis of these coins. They took off in a retail environment. These were not embraced by the large institutions. These were not embraced by the central banks. Many of the platforms that evolved were not legal in the US. So a lot of early activity in trading these instruments happened outside of the US, happened outside of the regulatory bodies that had become more and more and more robust in the wake of the global financial crisis, and then hit kind of a fever pitch around COVID after we exited a round of quantitative tightening and then entered into a massive stimulative central bank environment. That's when everything really hit a fever pitch, and we started to see the rise of these exchanges popularized by FTX. Sorry, guys, I just got off the ski slope. As you can see, I'm
by the way, this is why we normally do 10 a.m. is because by 5, our brains have turned to absolute mush.
But so we saw everything come to a screeching halt after trust was broken vis-a-vis Sam Bankman-Fried, the collapse of these exchanges, and Bitcoin fell from the local highs of, where was it? At the absolute
back during
highs.
FTX. Back during FTX, it was around 69,000.
65, 69. Oh, okay, got it. And where did it get down to? 18,000?
Yep, 16 to 18. Yep.
16 to 18. Okay,
and Jen, remind us where you almost could have bought in when I think you said your father-in-law gave you a book. We talked about this in the FTX episode, how your dad.
Oh, don't even get me started. Yeah, when my oldest son was born, my father-in-law gave me a book on cryptocurrencies and was like, "This is the wave of the future." And I was like, "Thanks, bro. I'm trying to figure out things, so I'll read this book." Never. And of course, I don't know where it was trading at the time. It was probably sub 1,000 for all I know.
Yeah. Oh, yeah.
You always hear these stories of the would-be Bitcoin heroes. Some guy walked up to them in a bar and offered them one coin for 12 cents and they didn't take it or whatever. All that nonsense. So Chris, can you talk to us a little bit about, okay, so we had the big retail run-up in the face of massive central bank intervention, and then the collapse after FTX and the whole scandal there. What has now perpetuated the resurgence of cryptocurrencies in a quantitative tightening environment where central bank policy is rather restrictive?
I'd really like to say that it is a shift in the entire ethos of the traditional landscape around cryptocurrencies. At one point, like you said, on the institutional side, nobody really believed in it. It was just the only reason it was a product that was offered to clients is because clients wanted to speculate on it. And some traditional institutions were like, okay, we'll give you an avenue to speculate on it. We'll charge a fee. We'll take our money. And we don't really believe in this.
Yeah.
But what has kind of happened over literally the past 3 months is the SEC has approved the spot Bitcoin ETFs for BlackRock, Fidelity, Van Eck, and the 7 other large asset managers in the traditional space. And now they have these products that they're able to offer to retail. You can go buy it on Robinhood. You can trade it on exchange. You can talk to your kind of brokers on the institutional side to trade OTC. You can, call up on the phone, your retirement accounts and get some asset allocation there. So what has really happened is it's gone from a more retail, speculatively driven asset to a lot more of an institutional focus.
I was gonna say, it used to be the crypto truthers, and now it's like someone like me who I never would have thought I would ever put any money in. I'm like, well, why not? Might as well put, I don't know.
Right. It's easy. It's liquid. It's regulated. It no longer feels like this wild thing that some random dude in their basement is ranting about. One thing you touched on quickly, Chris, that I want to clarify for our listeners if they're not familiar. When you say spot, can you explain what you mean by spot versus forward versus futures and things like that?
So actually there was a Bitcoin ETF that was approved back in 2022, but it was a futures-based ETF. So you never actually had to be on the institutional side taking delivery of the underlying asset. And that's, whenever we talk about spot, we're referring to the underlying asset. In 2022, we had a futures-based ETF. It was called Bito. And I think it was Valkyrie did it. And that was actually one of the more bullish tailwinds in that second resurgence after the summer of 2021. Yeah, if everyone looks at the chart, you will see a big spike, a big crash, another big spike, and another big crash. And it was right in between that summer and that futures ETF whenever people were really like, okay, like there are futures on the CME. CME is obviously a very regulated venue. People are starting to get serious about trading this. We have a futures ETF. And the reason that this spot ETF is very, very different is to be able to trade this spot ETF. First of all, there are very detailed legal and compliance hurdles that have been overcome by a lot of these traditional institutions that previously they couldn't do it just from a legal and compliance perspective. Regulatory wise, they were very skeptical about getting into it. But now those hurdles have kind of been overcome. The SEC has approved this. So now people are like good to go. But then secondly, so as I was saying, the previous one was futures. There were rolling costs. There were things about the ETF in which the fee structure was very high fees. So you didn't really have this pure Bitcoin exposure. You had some weird costs where, you were paying the front month future roll, and then there was extra fees, and then the liquidity for the actual futures underlying to hedge it wasn't very liquid. Now you have this pure product exposure to Bitcoin where these ETF shares on the institutional side can actually be created and redeemed by authorized participants for the spot underlying. And if they're taking delivery of the spot underlying, what does that mean? It means that they've figured out the custody solutions, all of the back-end infrastructure to truly have a product that gets you pure exposure to Bitcoin without having to go through some futures or derivatives or anything like that. You can trade these shares for pure Bitcoin on the institutional side if you want to, which gives a pure, unadulterated access to Bitcoin price action without any of the futures rolling costs or any extra fees. And actually, you'll see, I forgot who did it, but they literally just rolled their fees to 0% until 2025 just to accumulate some of these new inflows. So right now you see there are 10 spot products, I'm pretty sure, and it's a big fee war between all of them. And Fidelity and BlackRock are the two biggest. Yeah.
So I guess 2 questions. Number one, this is going to sound really dumb, but I assume that there is no Ethereum ETF, right?
That's coming next, right?
Yep. Okay. Not yet, but it's coming next, and people are speculating on that as well. BlackRock and a couple of the other ones have filed for that. I think one of them got delayed, but yeah, they love to postpone that as much as possible because that one's an entirely different kind of thought process as well. The actual technology behind Ethereum, it's very different than Bitcoin. But, the reason they're speculating that ETH is going to be next is it already has the CME futures. It's got everything that Bitcoin has. So that's why people are speculating it'll be next. And I think maybe, Q2 timeframe, that's whenever people are looking at it like May.
Got it. The second question I have, and again, this might be really dumb and it might be too ahead of what we're going to, because I don't know if we're going to release the second part, but if you buy into an ETF, Are you able to get access to some of that like layer 2 type infrastructure, or are you just having now exposure to price movement?
Only exposure to price movement or whatever the index is tracking.
However, though, what is a good point, though, is the people who are managing these ETFs do have to rebalance the underlying portfolio, right?
Yep.
So like they're actually trading the underlying.
Yep. So that's why a lot of the price action right now is super positive, because they're actually buying spot Bitcoin whenever they're going back and forth, creating and redeeming these shares. So yeah.
That was my question, is why does increased liquidity in the space automatically mean a boon for the entire asset class, right? So you answered that question right there.
Mm-hmm.
And one of the questions that we got asked when we were at South by Southwest, I'm curious to get your take on it, is that in the recent run-up in Bitcoin, there has been a corresponding run-up in all of the altcoins, right? The alternative coins, the secondary names, even some of the quote-unquote shit coins.
Yep.
Why do you think that is? Is that speculation around increased liquidity and legitimization across the board? Is it a rising tide floats all boats? Or is there something secular going on in those names as well?
Mm-hmm. So you kind of hit all the points. So there are certain altcoins where there's a narrative behind it. It's the, let's say, AI coins, right? AI is super hot. NVIDIA is doing really well. Well, it's a coin that's in the underlying project.
By the robots? Or like the robots traded with each other, like
it's a coin in which the underlying product is based on something to do with AI. So there's some where it is a coin in which you can instead of like mining, you can actually like rent out your GPU, like your graphics processing unit. You can actually have like this decentralized GPU network, kind of like cloud computing. So you have this decentralized GPU network, you rent out your computing power, and you get rewarded in this AI coin. There's a couple of popular ones, and then you use that AI coin to pay for resources as well. So it's like a different currency, but the underlying thing that you're actually buying and selling is graphics processing power. So that's kind of like an AI related coin.
What do you think about the theory that the way to play all of this is actually to trade the infrastructure that supports like the physical hardware behind all of this computing power, behind all of like the server storage and stuff like that required to facilitate these markets?
Yeah, I think that that's also a super hot trade in the traditional equities markets as well. You just look at NVIDIA powering all the graphics processing units for a lot of the data and a lot of the cloud computing as well. So to back up and go off your point of why these coins are all going up on the altcoin side. So we hit one point, it's these, certain narratives, the AI coin, the decentralized physical infrastructure. It's kind of overlaid with AI coins as well. I mean, NVIDIA has their AI conference next week. So that's why a lot of the AI coins have been performing well recently, I think. And then the second one is kind of just the overall beta to the Bitcoin ecosystem and cryptocurrency as a whole. So exactly like you said, rising tide lifts all ships. And that's kind of what we're seeing across Bitcoin, Ethereum, some of the altcoins. However, whenever you think about rising tide lifts all ships for some of the altcoins, it's actually a little bit more correlated to Ethereum than Bitcoin. And there's been an outperformance in Ethereum. Whenever Bitcoin was around 69K, Ethereum actually caught up and ran over 4K before Bitcoin broke 70K, I'm pretty sure. Ethereum was outperforming. That's why a lot of the layer ones, that's why a lot of the altcoins started to outperform as well. Usually those assets and coins are a little bit more correlated to Ethereum because those altcoins and layer twos and layer ones and things I was talking about, those are a little bit more correlated to the technology. Whereas Bitcoin is just like the main ecosystem. Like the
layer two economies.
Yep. Mm-hmm. Yeah. And Bitcoin is kind of just like the overall beta to the market, kind of like the S&P, right? So then whenever the S&P goes up, all the stuff that's in it goes up as well. So that's kind of, my perspective there on why a lot of the altcoins are running.
One other quick question on these altcoins. I mean, could I just decide I'm going to make a shit coin? Yes. How do those come about?
Yeah. So it depends on the ecosystem you're trading on. We talked about layer ones in the previous episode with like Solana and Ethereum and some of the different, layer one ecosystems. It's actually not very prevalent, in terms of shitcoin stuff on Ethereum because there has been so much activity across decentralized finance in these past couple of weeks. Ethereum's super hot. Everyone's trading on DeFi now. There's a lot of activity on Ethereum. And what that does is it increases the fees to interact with the network. So actually being able to swap and trade on decentralized finance has fees that are pretty astronomical.
In the South by Southwest conference, the moderator said that there was some kind of update where they were going to drop fees like 90%.
So there is,
on Ethereum?
So that is actually so that's one where it's a little bit more technical. There's an update for the Ethereum blockchain that is coming out. It's all decentralized and it'll happen on like an X block number that comes out, but they're reducing the cost of data availability on Ethereum, and it's a very developer oriented update. So there is an opportunity for like these layer 2 ecosystems that are built on Ethereum to have lower fees and things of that nature. But I think the fees for Ethereum could still be pretty significant. I'm trying to check right now for what the fees would be to swap. Oh, okay. Yeah. So I'm switching. I'm wanting to swap $40 worth of ETH to USDC, a stable coin, so I can offload it and turn it to dollars. And it's going to cost me $46. So,
oh wow. So it's going to cost you more. So basically, like you should never switch it out.
Yes.
It's
yes.
more expensive.
You have to stay in the ecosystem. You can't.
Yep. So exactly. So this is one concept of why shitcoins and stuff on Ethereum don't really happen. Because first of all, think about all the news that you see for some of these coins. There's one that's literally called like dog with hat. And it's like one of the most popular meme coins out there right now that has, I think, over a $3 billion market cap. And some people had initially invested $5, $10, and they're seeing a 1000x or like a 5000x on that return. So like seeing that being the initial capital that people are putting in, you can see why, okay, if I go buy $10 of this coin on Ethereum and it costs me $40 to get into it, I'm probably not going to trade it there, right? So that's why that coin. Yep.
And is that pure just like the tulip craze where it's like you're buying nothing? There's nothing underlying it. Is that what's going on?
Yeah. It's that you've pretty much described a lot of the coins is the greater fool theory and hoping to get out of it before someone else figures out, okay, I'm not going to be able to get out of this because nobody wants to buy it anymore. So you're
what
really
do you get out of it into? You get back out into Ethereum?
Yep. Yeah. You can get back out into Ethereum. And then the one I was talking about, so we kind of covered like, okay, the fees are too high on Ethereum to create these weird coins and stuff. Where all of this activity is right now usually is actually on Solana. So that's one of the layer ones that we talked about. It's super popular. If you Google anything, I think it's like, top 10 coin. It's definitely up there. But those fees are actually like in the cents. So you can actually see a lot of people get value from, hey, I'm just going to throw $5 on every single new contract address that launches in hopes that one hits 100x or something like that. And then in terms of like how you create these, there's a programming language called Rust, which is what these smart contracts in Solana are written on. And there are developers who kind of go through, create these smart contracts and create all of these shit coins. You'll actually see a lot of the developers literally just create. They're all like reusing the same contracts, changing a couple of different parameters. There's probably got to be a guide on how to create your own shitcoin or something on Solana. And I feel like there's a guide or a YouTube video like shitcoining for dummies or something. And it's just out there.
Speaking of for dummies, if you had to summarize in the plainest way possible, what is the difference between Bitcoin, Ethereum, and Solana? Aside from the applications, what at their core fundamentals is the difference between these layer ones?
Yep. So Bitcoin is kind of like the OG. People think of it as a potential currency down the line. They think of decentralized financial systems. That's what I think of whenever I think of Bitcoin. I think of like the digital gold narrative, store of value. Those are the things that as soon as someone says Bitcoin, that's what comes to mind. Now, whenever someone says Ethereum, the things that come to mind for me are decentralized applications, technology, a little bit more focus on like ecosystems and actually doing stuff with the money or doing stuff with the coin that you're trading. And then with Solana, what a lot of people who are in the weeds in crypto, as soon as you think of Solana, you pretty much just think of Ethereum, but faster, cheaper, and then not as high price. So that's what people, and that's actually a very like big point to think about whenever you think of the meme coins and the shit coins and things like that. Coinbase and a lot of these exchanges will list tokens, and think about it from the retail perspective, being kind of ignorant about market cap and they only see price. What is someone more likely to buy? The coin that's gone up 20% and it costs 0.0008 and I can get 1,000 of them, or 0.002 of a Bitcoin, right? Yeah. It's like, oh, psychologically, I own 1,000 of these little coins. whereas I only own 0.002 of a Bitcoin. So, I mean, the whole crypto scene it's very gamified. It's an attention-driven economy. And that's why a lot of these meme coins and stuff are performing, is because that's what's hot right now. People are seeing, 90% up, I'm buying in. And then eventually, whenever that volume dries up and people don't get interested anymore, price goes down, people start selling it. It's a very attention-driven economy.
All right. So 2 follow-up questions for you. And we will not hold you accountable if you are wrong. But first question is, would you buy into the market now? If you were someone new approaching the digital currency market, do you think now is a good time to try to jump in and get your hands dirty? And my second question for you is, if someone wanted to get up the curve in these things, we know that there's no real institutionalized way to learn about them. How would you recommend that someone educate themselves properly, other than getting you on their podcast and picking their brain?
Yeah. So, I mean, those are great questions. That's something that I'm always thinking about. It depends on what you want to get into, right? So we talked about a variety of different exposures that you can have in digital assets. Yeah. You can have the pure exposure to Bitcoin and Ethereum. That is what the institutions are focused on right now. Mm-hmm. You can be speculative on popular narratives that might pop up in the ecosystem. Maybe I buy some AI coins or something related to AI because NVIDIA is performing really well. They have their conference next week. Actually, one of the popular AI coins, I'm pretty sure Render, not financial advice or whatever, Render is going to be presenting next week.
Jen immediately Googles how to buy Render and sell it 1 week later.
Yeah, they're actually going to be presenting at that conference. I'm pretty sure. I think I saw it on Twitter, and I'm pretty sure they're on a speaker panel there. But that's one of the okay, this is a narrative in traditional space where there's a proxy to being able to invest in it on the digital asset side. And then third, so it's these attention-seeking kind of meme coins, and those are very interesting right now. From the Bitcoin and Ethereum standpoint, I would be relatively cautious, right? There's always the meme where it's the people lining up to do something at the theater, and it's Bitcoin was 18K over here, nobody was lined up. Now Bitcoin's 72K and everyone's lined up. Why didn't you just get 18, right? The environment was completely different. So from my perspective, I personally would be a little skeptical. We've had such a hot run up so quickly, and it's so overheated. And that's not just a subjective term. That's actually relatively objective, because there's this instrument where you can get a lot of leverage exposure to these digital assets, and it's a perpetual future. It's like a normal future. You put up a small amount of capital and you get an excessive amount of leverage and exposure. Mm-hmm. But there's a data point there that shows funding rates, which is a mechanism of the perps. People can Google that. It basically is showing that there's a lot of leverage in the system right now. So that's why you're starting to see a lot of volatile price action. Because whenever there's a lot of leverage in the system and someone gets liquidated, it's a forced sell or a forced buy. And it's really driving price volatility to some, if you pull up TradingView chart and someone pulls up a TradingView chart and they open the day, I'm pretty sure either yesterday or the day before, you saw a massive wick down from 73 to 69, back up to 71. That's an asset that has moved, over 8% intraday. So that's something that is obviously very volatile. And right now you're in a very volatile environment. So I would say if, you wanted to get into Bitcoin specifically, be ready for some volatility, and maybe don't dump it all in. Maybe dollar cost average, maybe slowly get in, right? And then from the Ethereum side, that could maybe be a little bit of a smarter trade from a relative value perspective. So Bitcoin's broken all-time highs, right? We're above 73K. Back in all-time highs for Bitcoin back at 69K in 2021, Ethereum was actually 4,800. So if you're thinking about it from a relative value perspective, new all-time high in Bitcoin, but we haven't hit it in ETH, a little smarter maybe.
And then how did you get up the curve on this stuff? And how do you think people can learn about this stuff in a safe way? Because I think just as much as there's a decentralization of information can be great, it's also dangerous when you have so much retail speculation in these things, even in the world now of ETFs, right? This is still a largely decentralized, retail-led, not institutional-led move. I mean, who are the strong hands in crypto, right? So where can the average practitioner get up the curve?
Yep. So I did some thinking about this. These exchanges that are retail oriented, that retail would trade on, Coinbase, Kraken, those actually have their own educational resources on them now. So I was looking at some Coinbase educational stuff in terms of what is a blockchain and stuff like that. that's reputable.
Is it good? It's good. You think it's good?
I think so. Yeah. And then the other one that does everything from beginner to advanced is actually the education platform of another exchange, Binance Academy. It's free. It's all public. If you go there, they have everything from like, what is Bitcoin? What is a consensus mechanism? What is Ethereum? All the way to like very advanced subjects and topics within the space, and then very intermediate stuff as well. They actually have a guide on what a perpetual future is. So if anyone was curious about what a perpetual future is, Binance Academy has that resource. Once you understand a lot of the basics of crypto, that's whenever you start feeling a little bit more comfortable finding some crazy stuff maybe on Twitter, which is, like you said, it's decentralized. You don't know who to trust. But after you learn a lot of the basics, you understand, okay, I know that if I do XYZ, it could lead to ABC. Like it could be a scam
you
or
have
something
a
like that.
filter and a mechanism by
Yes.
which to evaluate whatever noise may come across on the internet.
Exactly. Yep.
And then this is, again, just more of like a trading thing. Can people short? Can you short like Bitcoin?
You can do that, but you have to do it through a derivatives market. You can't just borrow spot to sell. Yeah. So you do it through a derivatives market.
It's just like, as you think about pressure, it's like if somebody thinks that, oh, wow, it's like really high, you don't have any way to kind of take the other side. If you own it, you sell it.
You could sell it if you're a holder in the US, but a lot of it, I mean, there is a massive amount, just like in traditional finance, the derivatives notional volume that goes through compared to spot is very, very high. So sometimes you get the, like, what's driving price? Is the tail wagging the dog or is the dog wagging the tail? And that's like the derivatives market versus spot. So over the past couple of weeks, we've seen a massive amount of spot demand. It's not been like a very derivatives-led rally in which everyone is leveraging up on derivatives. People are arbitraging between derivatives and spot, and it's driving the spot market higher. It's actually like a very spot-led demand because, like you said, there's so many inflows within these ETFs, and these participants actually have to buy the underlying to redeem with shares now. So it's a very spot-led market right now, but we're also seeing on the derivative side, a lot of people going long with leverage. So a lot of people are buying, 10x contracts with Bitcoin exposure on the perpetual futures side, and that's also causing a lot of the leverage. But yeah, from my perspective, the short interest in Bitcoin and the short activity is actually not as high right now, even though we're at all-time highs.
Awesome. Well, listen, I think this was a great place to leave off so that we can tackle now coming into the industry as a whole and thinking about what the trading landscape looks like, and especially thinking about careers in the crypto space. Because again, I think it's phenomenal that, Chris, I mean, we're not going to share your age on here, but you are approximately half our age. And you are already a significant expert in your field. And I think it's such an exciting field wherein young people can get to the upper echelons of knowledge and expertise very, very quickly. So that's where we'll pick up in part 2 of this. And yeah, thank you again so much for your time. We really, really appreciate you.
Yep, no problem.
All right, take care.